In the United States, one dividend ETF has earned a reputation that few others can match. The Schwab U.S. Dividend Equity ETF, better known as SCHD. With more than $80 billion in assets, it's 10 times larger than Europe's most popular dividend ETF. But the real question is this: why are investors so obsessed with SCHD? Because it's a dividend growth machine that keeps raising its payouts year after year, usually by 5 to 10% each year. And on top of that, it still delivers a dividend yield of around 3.6%. Strong growth plus solid yield. That's the magic formula. Here in Europe, we also have dividend growth ETFs. But let's be honest, the yields are tiny compared to SCHD. And to make things worse, we can't even buy SCHD here in a UCITS version. So for years, we've had no real alternative. At least, that's what I thought. Until I discovered a brand new ETF that might finally change the game. The L&G Global Quality Dividends UCITS ETF. It only launched in early 2026, but its strategy is unlike anything else on the European market. And I'll be honest with you, I'm genuinely excited about this one. I think it could become extremely popular very fast. In this video, we'll break down what this ETF does and why it might be the closest thing Europe has to an SCHD alternative. Quick disclaimer before we start. This is not financial advice, just my own opinions and experiences. Let's start with the key facts of this ETF. Because it's still extremely new, we have to collect the information from different sources. So let's begin with the official page of the ETF provider. The fund aims to invest in developed market companies with strong dividends and solid quality metrics. Here we can see that the ETF was launched only recently and still has a very small fund size. It uses physical replication and is domiciled in Ireland, which are both good signs. But what exactly is inside this ETF? The official website doesn't show much yet, but we can find the details on Extra ETF. Let's look at the country allocation first. 27% goes to the United States, followed by Japan and other developed markets. Here we also see the breakdown by regions. This is a very nice level of diversification, with a balanced but not overwhelming U.S. share, and I really like that. The sector allocation is no surprise either. We see the usual sectors you expect in a solid dividend ETF: financials, industrials, utilities, and so on. But the top 10 holdings reveal two interesting things. First, the companies are mostly well-known names, but many of them come from Asia. Second, the top 10 make up only about 3% of the entire ETF. So this is basically a kind of equal weight approach. Honestly, you don't see that very often, especially not in dividend ETFs, and it's a very interesting idea. Many other dividend ETFs have a top 10 that takes up 20 to 30% of the entire fund. In total, the ETF holds more than 900 companies, which is also quite rare. So overall, we can say this is an extremely well-diversified ETF with a very pleasant country allocation. And isn't that exactly what a long-term investor wants? If you enjoy my content, a like and subscribe means a lot. Thanks. But hold on, that's still not everything. Let's jump back to the L&G website. What really makes this ETF stand out is the index it tracks. FTSE developed all-cap dividend growth with quality index. This index targets companies that grow their dividends, offer higher yields, and score high on quality. That already sounds pretty promising, doesn't it? The index includes large-cap, mid-cap, and even small-cap companies. And that's something you never see in the world of dividend ETFs. The index is a subset of the big FTSE-developed all-cap index, which contains more than 5,000 companies. In the ETF's prospectus, we find even more details that make this product so exciting. First, this ETF pays dividends monthly. For the European market, that's unique and basically exactly what dividend investors have been wishing for years. Yes, we already have some monthly paying ETFs, but they always involve call options, active management, or other tricks. Here, we finally have a pure, passive dividend ETF. Second, there is a quality filter that ensures only strong and healthy dividend companies make it into the fund. And third, as we saw earlier, the companies are equally weighted, which creates extreme diversification. In my opinion, all of this already makes the ETF very attractive. Now, the only question is whether it also pays a decent dividend. Further down in the document, we see that the dividend yield of the underlying index is 3.7%, while the parent index doesn't even reach 2%. 3.7% is definitely not bad. But since the ETF is still extremely new, we don't have a real dividend history to confirm that. But maybe we do have at least one clue. The ETF already made one payout this year, in February. If you project that payout over 12 months, you get a yield of about 3.8%, which is quite strong. Considering the ETF holds more than 900 equal-weighted companies, that payout level is impressive. This yield is roughly in the same range as SCHD. Speaking of SCHD, the popular US ETF is known for its strong dividend growth. So how does the L&G ETF compare? We don't have a dividend history yet, but the index rules show us exactly what kind of companies get included. It focuses not only on dividend quality, but also on dividend growth. Only companies with at least 10 years of positive dividend growth are included. Honestly, I really like this approach. If the ETF manages to deliver around 7% dividend growth per year, which I think is realistic, then it doesn't need to hide behind SCHD at all. With global diversification and monthly payouts, it might even be the better choice for us here in Europe. Many dividend ETFs struggle with weak price performance and fall behind the broader stock market. But what about this one? We know the L&G Dividend ETF is brand new, so we don't have any real history yet. But we do know which index it follows, and that index gives us 5 full years of data. So let's take a look at the index description document. Here we see that this Dividend Quality Index performs just as well as the full all-cap market. Now that is interesting. The annualized performance over the last 5 years is 13%. That is a very strong result and a clear sign that we're dealing with real quality companies here. Honestly, I'm genuinely impressed by this ETF so far. Now let's take a quick look at what the ETF's cash flow could look like. We assume the ETF pays 3.7% in dividends per year, with payouts growing by 7% annually. We also assume that the ETF's share price grows by 7% per year. Yes, we don't have a real history yet, but I think this is a realistic scenario. Now, let's invest 10, 50, and 100,000 euros as a one-time amount and see what kind of monthly cash flow we could expect. And let's also look at how that cash flow might grow over the coming years. And here is the table. All right, let's quickly run through the pros and cons of the L&G ETF. Let's start with the pros. The ETF holds quality companies. A dividend yield above 3%, which is rare for a European dividend growth ETF. Dividend growth expected. monthly payouts. Extreme diversification thanks to equal weighting, and strong regional diversification on top of that. Now, what about the cons? Honestly, I'm not sure there are any big ones. Some people might complain that the dividend yield is too low, but remember, these are quality companies with rising share prices, and that naturally pushes the yield down. The only real downside right now is the small fund size, but I'm pretty sure that won't be an issue by the end of the year. I'm convinced this ETF will grow in popularity very fast. And I have to admit, if the dividend yield and the dividend growth stay stable over time, this could easily become my new favorite dividend ETF. So, is this L&G ETF better than SCHD? Well, the future will tell, but the chances look good. Here's why it might even be the stronger choice. The L&G ETF pays monthly, while SCHD only pays quarterly. The L&G ETF holds 900 companies, while SCHD holds just 100 and no small caps. And the L&G ETF is globally diversified, while SCHD focuses only on the US market. The last one is especially important for us European investors because we should diversify across all currencies. And now I'm curious, what do you think about this ETF? Do you think SCHD is still the better option? And why? Feel free to share your thoughts in the comments. That's it for today. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.